Hi YouTube, it's Janelle here. In my last video, I posted about why you should not stop investing in the stock market if you've already been investing and there's a bear market, which means the stock market is dropping or it crashes or whatever you hear in the news, that you shouldn't stop investing. You should just keep going. And I did not expect to get attacked by, I'm assuming I'm getting attacked by stock traders because that's what it sounds like, but just a little peek at the comments and you'll see, like, people were mad at me. I was called crazy. Somebody said I live in IKEA or that I work for the CIA. I do not work for the CIA, although that would be a really cool job. But basically, I was just shocked. Like, I didn't expect that reaction. So I started, like, reading through the comments. I'm like, why are there so many people responding this way? I think it's pretty solid advice that you should continue investing so that you could dollar cost average. I posted a video about dollar cost averaging. I'll link it up here if you haven't watched it. So if you don't know what that is, basically to save money by paying the average price of stock. So when they're up, you pay high prices. When they're down, you pay low prices. But over time, you pay the average. But then I started thinking about it, because even some of the positive comments were like, oh yeah, buy low, sell high. Even they didn't quite get the message. So it must have been something wrong with my delivery. So I own it. It was my fault. So what I was trying to really say in that video was that it depends on the context of what type of investor you are. I personally do not consider swing traders, which means that you trade by day or by week, or day traders, which means like minute by minute, you're watching to see when the stocks go up and down so you can buy and sell all day long. To me, that's trading stocks. That is not investing in the stock market. And I really do think that in the world of personal finance and financial literacy, especially if we're talking about educating people, we need to make a clear distinction. They're different. They're not the same. When you're trading stocks all day, you're looking for a quick profit, a quick buck, and you're willing to be very risky all day throughout the day to try to make a quick buck. And over time, those quick bucks, those quick profits add up, which I totally get that, but that's a lot like gambling in a casino. Like, you're risking all day, all your time, all day long. Maybe you hit big, but maybe you won't. And is that really worth your time? For me, no. I'm a long-term investor, which for me means that you're putting money in the stock market for the long term. You are going to wait it out so that interest compounds over time instead of you like collecting, profits from sales every, day. It's just like, to me, it doesn't make sense. It's a lot more work. There's a lot of fees attached to it every time you sell and buy. So the whole context of that video was me talking about long-term investors and me talking about people who commit to investing ideally the same amount of money every single month, but just the whole point is to be committed and consistent. Every month I'm going to invest no matter what. People like that, especially if you started investing after 2008, like if you started 2009 to now, you've more than doubled your money. And so of course you're tempted to keep on investing, but then you see that it's dropping and you're like, oh no, it hasn't really dropped since like 2009 until very recently. So now for the first time in like 10 years, people are seeing negative returns and they're, oh my gosh, I'm losing money. So that's why I think it's important for me to have posted that video now, because a lot of new investors are just starting to feel that. On top of that, I also had gotten a bunch of people asking me, like, I got emails and comments on videos saying, hey, why isn't it a good idea to stop when the market's not doing well? Aren't we losing money? Why should we keep pumping money into something that's losing value? So that's why I felt the need to make that video. But anyway, what I do like about this experience, getting a lot of feedback from people, was I really got to like feel people's voices. So that kind of inspired me to have more of a conversation with people. So I decided to really hear your voices instead of just reading emails and comments all the time. And so I have put together a number where you can call. If you want to be on my channel, you could just call this number and record your comment or question. And the number is 774-231-8522. So you can call that number. Again, it goes directly to me. I will listen to the message or the comment, and then you might get posted on the channel, maybe in the next video or the next few videos, and I'll do my best to respond, tell you what I think about your comment or question. And I've done a lot of Q&As before, but this way I think I'm going to do things a little differently. So I'm really excited about that. But yeah, that is pretty much what I have. I felt like I just wanted to respond to that. I felt attacked, but at the same time, I felt like I wanted to apologize because I didn't give the context within which I was giving that kind of opinion or interpretation of the market. So hopefully you like this video and you understand. If you haven't seen the previous video, maybe go watch that one so you know what I'm talking about. And if you haven't yet subscribed to my channel, What are you waiting for? Subscribe. My channel is really fun. I'm really fun. You'll get notifications and stuff like that so you know when I post. And then you can also follow me on social media, and that way you can kind of see other things that I do outside of personal finance. I get a little bit more personal there, and I also like to engage with people, so you can follow me there. And again, that number to contact me is 774-231-8522. You can also email me at MissBeHelpful@gmail.com. That's all I have for y'all. Till next time, peace.